Well, Bajaj Finance reported a net interest income growth of about 4%. The NII for the September quarter stood at 4,165 crore rupees and came in line with the ET Now poll. While on the flip side, profit witnessed a degrowth of 36% on a YoY basis, standing at about 965 crore rupees and was pretty much slightly below our expectation. Well, the profitability was particularly dented due to elevated provisioning. Well, management in their previously quarterly update had guided for accelerated provisioning. So the provisions were up almost 2.9 times on a YoY basis and slightly by about 0.8% on a sequential basis. The provisions for Q2 stood at 1,700 crore rupees. Talking about the asset quality, well, largely stable trends out here. The GNPA's ratio was at about 1.03% versus 1.4% on a sequential basis. The company, in fact, additionally mentioned that they have not classified any accounts which weren't NPA as of 31st August. As per our RBI norms, but had they been classified, the GNPA would have been at 1.34%. So nonetheless, not much of a spike, largely a stable trend out there. Well, the company had already updated on the Q2 operational performance as far as the loan growth and new loans booked and the AUM growth is concerned. The AUM further slowed to multi-year low of just about 1.1%. So this was pretty much known. The capital adequacy also stands pretty robust. Liquidity position continues to remain strong. The deposit growth was healthy at about 23%. Well, the company in their quarterly conference call highlights mentioned that they're currently witnessing month-on-month improvement in volumes across all their businesses. They were conservative when it comes to volumes till August, but now that we are seeing gradual recovery and opening of the economy, they've started to accelerate volumes across their businesses. They also added that bureau information is expected to be fully on stream by November, and this should further aid momentum. Well, talking particularly about the segments, up till September, and in September, the urban consumption businesses were almost at 72% level versus previous year. The rural consumption particularly showed a very sharp recovery, the volumes coming at about 91% of the previous year volumes. The auto finance business also was at 54% of last year's volumes. So definitely things seem to be on an improving trajectory. The important aspect came in when the company had mentioned and guided that they are estimating an AUM growth of 6 to 7% for FY21. Well, this one's slightly of a bummer given in the previous quarterly highlights, the company had guided at 10 to 12% of AUM growth for FY21. So we are seeing a bit of a moderation as far as the AUM growth for the full year is concerned. But having said that, they've also mentioned that if the momentum in Q4 continues to remain strong, there may be upside potential. The company plans to achieve Feb 20 levels of loan originations by March or April of 2021. They continue to add that given the favorable marketing conditions, they will slowly dial down liquidity buffer over 6 months. Given that they already have and hold a strong liquidity buffers on their balance sheet, the management in their con call highlighted that going forward, they would not be raising or borrowing too much other than CPs, given they already have so much of buffers. They also adding that they expect to revert closer to pre-COVID-19 liquidity buffers by March 2021. Lastly, they also added that FY21 onwards, loan losses and provisions should revert to pre-COVID-19 levels of 160 to 180 basis points of average assets. Well, now Q2 FY21 was pretty much witnessed a slower growth, which was on expected lines, but nevertheless, the company seems to be a little optimistic of the outlook going forward. Let's see how the future quarters pan out.